Hello, ladies and gentlemen. Happy New Year. This is Marty Erico from CrudeSquawk.com. Just giving you some general comments on crude oil. Alrighty, ladies and gentlemen. So what we did see on our last trading day of the year of 2012 here on December 31st, we did have our pit session on Monday. We're going to recap our pit session, and then we're also going to talk a little bit about what we can see in the week ahead here. So we had 91.95 on the high end of our trade, 90.25 on the low end of our trade, and we did close and settle the day and the year at 91.78. So again, ladies and gentlemen, catching a bit of a bid here in the crude market. First and foremost, I'm going to recap the trades that we saw in the pit, kind of some two-sided activity, and then we're going to go and take a quick look at a couple charts here so we can get all ready for the broadcast on tomorrow here, talking January 2nd. As we promised, we'd be back for you. So first and foremost, in the pit on Monday, we saw the Feb 85 puts trade about 1,000 times. They went for about 30 cents. So just shoring up a little bit of some downside risk here. I believe it's just some big institutions massaging some money around here. So about 1,000 Feb 85 puts trade for about 30 cents, as I mentioned. So that's kind of our downside that we have secured here, which has been the bottom of the range from 85 to 90. But now let's talk about this upside activity that we've been seeing here. We saw the Feb 90 to 95 1x2 call spread trade about 800 times, and they went for about 370. So again, a rather really not too expensive of a trade, but a fairly expensive trade on the board there for you up to the 90 to 95 1x2 call spread. We saw the Feb 90 to 93 call spread trade about 1,200 times as well. So both of those market participants there, they're just rolling over some longs, obviously looking bullish there. So again, off of that, what we're going to do is we're going to take a quick look at one of our charts here. You can see the box that's shaded there. That was their trading range from 85 to 90 that we've been in for the last couple weeks now, as you can see as I scroll the chart back just a bit here. Again, so as we take a quick look here, we look at that 93.5 as our next big major level of resistance here. We tested it about 4 times in October, never broke it. So again, we just really want to watch this and see how it lines up with that options order, that 90 to 93 call spread. So again, they're buying the 90 call, they're selling the 93 call. So really just keeping that tight type of range there. So we can really expect that 93 to 93.5 as the top and some big resistance. But again, what steps into play is this Feb 90 to 95 1x2 call spread. That was traded over 800 times in the pit on Monday. So that's a really big indication that they possibly really might want to take this market up and just break it out up into the $95 handle. But we can definitely, as I mentioned in the previous commentary video, we were looking to possibly break out of this range, which we did now. Again, we saw a couple variables to really make that happen. We saw, obviously, that terrorist threat in the United Arab Emirates. There was that terrorist threat that we were watching, and that kind of made crude spike up on last Wednesday, when we rose about $1, $2 a day after Christmas. We saw that Iran put a no sale zone for one of their spots in their territory in their sea, because they have a lot of their oil tankers over there. So again, they had a no sale zone, so their navy's out, and obviously that caused a little more speculation into the market to make prices go higher. So again, those geopolitical fears that make this market rise. So the slightest type of geopolitical fear that comes out tomorrow, which is going to be the 2nd, we're talking January 2nd when we're going to be back. If we see any type of geopolitical fears, that can definitely make the market go higher. If we can see more of these call spreads and more outright buying come in for the first trading day of the year, that can also make prices go a little higher. So we really want to watch and see what happens. And again, also highlighted here, you can see that we have that 93.5 as our big level of resistance here. We did break out of our trading range. As we draw our fib retracements, we see our fib retracements here that line up with this 93 big time here. So again, really lining up there. As you can see, our fib retracements, that the negative 23.6 line up with the 93.5, and that's our resistance. So the fibs don't lie half of the time. So we really want to see and watch if we can get up to that 93.5. So again, ladies and gentlemen, we just talked about the pit session from Friday as well. Those were the big orders that were in the pit. We're going to be looking at that 93.5 as some resistance, and that's going to be it for now. We'll see you tomorrow morning at 8:50, starting up the broadcast.